What's up, everybody? Welcome back to Earn It, Save, and Invest It. Today I'm going to be breaking down Hims and Hers fourth quarter 2025 earnings release. So they just released basically their full year 2025, and they also released some guidance to 2026. So what we should be expecting. They released their 10K, so it was like a bunch of information to break through. I went through it all, and I'm going to kind of summarize it for you so you should know what to expect, right? I'm going to go over their financials. I'm going to go over what to expect in 2026, as well as the GLP-1 issue with Novo and all that. They sprinkle in a little bit of information, so I'm going to break that down, highlight that for you. So if you can, just please give me a quick like and subscribe. I'd really appreciate it. And let's get to it. So like I said, I'm going to go over quickly the financials, the 2026 goals, and the GLP-1 update. So, go ahead, yeah, like and subscribe. The financials, this is their key financial highlights, right? This is what their key financial highlights. So the revenue, it was up 59%, 2.35 billion for the whole year of 2025. That's pretty good. The net income, though, if you know anything about Hims, they have been investing heavily. So when you are investing your money, that means you are giving up a bunch of your profits, right? So 2025 was a year of giving away profits. They only went up 2% in net income. They went up 59% in revenue, but only 2% in net income, right? So they made a lot more money, but they really didn't put it back to the shareholders in that sense of the income, right? Their adjusted EBITDA was 318, so it's up 80%, which is great. Operating cash flow was up 20%, but the free cash flow was down 71%, again, because they're giving up the cash to just do a lot of investing, right? Subscribers was up 13% to 2.5 million, and the monthly revenue per subscriber was $83, up 28% year over year. So that's pretty good. So going over all their income statements and the statements of operations and comprehensive income, the revenue was up again 59%, but the cost of revenue was up 102%. So their gross profit was only up 48%, right? So their cost is going up. Operating expenses was up 35%. So total operating expenses was up 46%, right? This was their marketing. Their marketing was that's one of their biggest expenses, so that's why I marked that one. And then again, the net income only up 2%. And so their EPS was actually down 4%. It was down 4%. So, right, it was 51, 53, that's not good. And then how many shares they had available, it went up about 9%. So it was not a year of giving value to the shareholders, that's for sure. This is their balance sheet, right? Assets, it went up 205%. As you can see, property, equipment, it went up tremendously because they are investing heavily into all these facilities. And then again, liabilities went up 600%. Convertible senior notes, right? They took a lot of loans out to buy all these facilities. So they have a lot more liabilities, whereas operating leases, look at that. They only had 9 million before, now they're at 143 million, right? So these facilities definitely added a lot to the liabilities. So that's that. The cash flow, there we go, was up 20%, the operating cash flow, but again, the free cash flow was down 71% because just all the investment that they've been making. The cash, short-term and long-term investments, still though is going up. So that's always good to see. Now the subscribers went up 282,000. And so right here you can see the blue is for single day. So these are people who just have the one off and they do one thing. And this is the multi, so people have more than one. So obviously when they have somebody in their system, they're doing more than just one, right? And then the monthly revenue per subscriber is $83. The US revenue is at 2.2 billion. And then the rest of the world is at 134 million, but they expect that to grow significantly. This is kind of like the whole market, their total addressable market, right? Who they're going up against. So as you can see, they really have a lot of the market share, right? It's not increasing as much as it was initially because they have so much of the market right now, but they're almost at 50% of the market. And same thing with here, right? They've increased, but it's hard to keep going up as fast when you already have so much of the people inside your ecosystem. Their 2026 goals. They're hoping to have 2.7 to 2.9 billion in revenue, and I'm going to kind of go over how they can do that. It's actually pretty simple. I'll do it right now. Actually, let me pull up the calculator. Watch. So they hope to make 2.7, right? Well, they have 2.5 million subscribers, right? We're going to multiply that by 80. Let's multiply that by 90, right? Because let's say they raise the monthly revenue per subscriber, right, from 83 to 90. It's not a big jump, right? That's how much they're making per month per customer. So we got to multiply that by 12. That's $2.7 billion, right? So they're assuming if they don't grow any subscriber, right? No subscriber growth, and the average, monthly revenue per subscriber goes up less than 10%, that they can make 2.7. So that's a really achievable goal. That is absolutely achievable. If they were to go, this is how many subscribers. Let's say they went up, let's say 10%. Let's just say 10%, right? And I multiply that by 83 per month. Oh, that's how much if they were doing current prices, 83, right? So I think that's an achievable goal. They have 85% long-term retention, strong unit economics, payback period. So they have a lot of, again, how they're running their company, all the investments they're making are returning it back pretty quickly. Evolving models drives inherent marketing efficiencies. Hers expected to reach 1 billion in revenue. I'm expecting, or I assume they mean that by like maybe the fourth quarter or something, because obviously they're going to do more than 1 billion in revenue. And the international becomes material incremental growth driver, which I definitely think is going to happen as well. They're investing a lot into international markets, as well as the GLP-1 patent is up. Now people can just use it. So I think they're going to be doing a lot of that in the international market. The adjusted EBITDA, oh my gosh. They want it to be to 300 to 375. So again, we just have to see exactly how investments and how much expenditures they have. They say our platform's uniquely positioned. Let me just go through the highlight. It says 2026 is the right moment to invest more. So here's something to expect. They're going to be investing even more. But it says a drive toward our 2030 financial ambitions of driving at least 6.5 billion in revenue and 1.3 billion in adjusted EBITDA. So they're still putting that out there that they are going to make that 6.5 billion in revenue by 2030. Their aim is to establish Hims and Hers as curator of these solutions and services globally. In 2026, we expect to become a leading power provided GLP-1 medications in international markets. This is a significant step for our platform and a clear representation of different routes we can leverage to drive more connected and accessible healthcare ecosystem for all our customers. So again, internationally, they're really going to attack that, and that's going to be a big revenue driver. Here we go again, just saying their 2026 outlook of 2.7 to 2.9 billion in revenue, right? That's what they are expecting. They're going to keep saying that. Same thing with 2030, 6.5 billion and 6.5 billion in revenue, 1.3 billion in adjusted EBITDA. So they're, even with all this stuff going on, they're still saying by 2030, that's going to be okay, right? So let's go through the GLP-1 update. A lot of people think, okay, what's going to happen with de novo and the lawsuit and all that. So I went through the 10K, and they have the regulation of compounded drugs, right? This is a section that they have. I highlighted all the good stuff. So it says certain of the products that are or have been available through our platform are compounded drugs under Section 503A or Section 503B of the FDCA. Section 503A permits compounding of a drug that is not essentially a copy of a commercially available or FDA-approved drug product by a licensed pharmacist or a licensed physician based on a receipt of a valid prescription for an individual patient or limited quantities before receipt of a valid prescription if certain conditions are met. Compounding under 503A is primarily regulated by state pharmacy laws and regulations governing pharmacy operations. 503A pharmacies are not subject to current CGMP requirements, and these facilities are not inspected by the FDA. So the 503A, this is where the GLP-1, everything lies. The whole lawsuit lies in 503A. Are they doing it okay, right? Now, Novo, I think, is going to just say, hey, we don't want them to do it. They're, we shouldn't let them do it. Now, I don't know exactly if they're going by the law. That's what's happening, right? And that's what they're doing. Right here on February 9th, 2026, Novo Nordisk filed a lawsuit in the U.S. District Court. The complaint asserts claims for patent infringement related to Novo's patent in connection with compounded GLP-1 products containing semaglutide available based on a prescription through the company's digital platform. It also included a complaint and request permanent injunction, so just to stop doing it fully, to bar the company from continuing its activities related to products containing semaglutide until it expires on December 5th, 2031. At this time, the company is unable to estimate the probable loss or range of loss, if any, associated with this matter. So they don't know yet. They're still not saying too much. Now, obviously, there's a bunch of stuff here. Some yellow is kind of like a medium, a green is like a good, and a red is a bad. So let's see. On February 21st, the FDA resolved, February 1st, 2025, the FDA resolved the semaglutide shortage. Resolution of the shortage limits our ability to use 503B outsourcing facilities, right? So they could use 503B because that's bulk. They could do a lot. Now they can't. So it limited their use of that to provide access to compound semaglutide on our platform. In particular, we currently only use 503A compounding pharmacies for the fulfillment and dispensing of compounded GLP-1 products. That's big because they're saying that this is all we use. If they were using 503B at all for their stuff, then they are in the wrong. But they're currently only using 503A, and so legally that is okay to do. While we continue to offer access to certain compound GLP-1s consistent with the statutory exemptions from the new drug approval requirements, right? While we continue, so they're not stopping, we cannot guarantee that we will be able to continue the offering products in the same manner to the extent or at all due to a variety of factors outside of our control, including supply chain, intellectual property, and regulatory matters. So they're saying, look, we're going to keep doing it until someone tells us we can't. That's what they're saying. They're literally just saying, while we continue to do it, we can't guarantee that we'll be able to. So they're not going to stop. They're going to keep offering it, and it's going to go on into court, right? Go ahead, please give me a like and subscribe. That's it basically. I just wanted to give a quick rundown of what to expect. So for Hims, really what you need to expect is they're going to hit, I believe, that 2.7 to 2.9 billion. It should be a very easy mark for them to hit. The GLP-1 lawsuit, I believe they're going to lose the battle, win the war. I think they're going to lose on the advertising when they said same active ingredient as Wegovy, because that you can't say. As well as if they used any of the 503B facilities after the shortage, right? And if they offered any of the just generic compound or the generic version of it, right? So that would be the only thing. But I think if they're following the law, 503A compounding facilities, they admitted while we that's all we do, that's all we use, and then they're saying we're going to continue to do it. I feel like they're going to walk away with a little slap on the wrist, but you also have to understand that there will be some money being towards the lawsuit a little bit, and then as well as they have 2026 is full of investing. They're going to be investing. That's what it sounds like, that they just want to keep investing into 2026. So there's no guarantee that they're going to reach, they didn't put out a net income. This is what we want to, end up profiting, right? They say, look, this is how much we're going to make. And this, when you look at the numbers and you look how much they have, subscriber count times how much they're making per month. I mean, it's an easy number to hit, but how much profit are they really going to make after all of their liabilities, right? We went over the liabilities. It grew 600%, right? Now it's from the loans and all that stuff. And now their lease liability. So they got a lot more liabilities. So they have to really... it's going to be interesting to see what kind of other moves that they make, because if they keep investing, you have to just assume that they're going to be taking just less profit than they could, right? But we'll see. The next quarter, maybe they put out something, we'll be able to see kind of what more international. I think international is going to be big. GLP-1 is going to be legal. So, there's no patent to it in that sense. So, we're going to see exactly what happens. But that was kind of my quick breakdown of it. I had a crazy technological issue recently, so I was just having all kinds of problems, as well as I had a 4-day personal vacation. So, kind of been a little bit out of it. But thank you for watching. If you're even still here right now, I love a like and subscribe if you can. And never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.